sum up what Andrew Bailey had to say yesterday, downplaying the 30-year. You can understand why, and also kind of downplaying the possibility of an interest rate cut as well.
Yes, so overall the tone has been interpreted as being more cautious, and this is probably confirming the paring back we've seen in bets about further rate cuts going forward in the year. So we had the August rate cut decision. We had this historic deadlock amongst the Monetary Policy Committee members. Yeah. So this was really, we wanted to kind of hear more comments about their thinking, about why certain members voted that way. So it was really interesting how there's a big focus on inflation, especially from some of the more hawkish members, such as Deputy Governor Claire Lombardelli and also from Megan Green. But again, the Bank of England's going to have to weigh this up with worries over growth and also the labour market, which first showed signs of softening, then showed signs of stabilising. There's been issues with data quality. So overall, it's a little bit of a confusing picture. So no wonder there's a bit of caution, but it seems to chime with market thinking now.
Well, in terms of confusion, why would the government plan such a late autumn budget? The date is now November 26th. Why are they delaying it?
It's a great question. So it's a very mixed picture on the growth front, on the economic front. So perhaps they just want to get more of a certain view on what's going on. We've had inflation, which is proving very, very persistent, but then we've had this weakening of the labour market. So it'll be great to kind of see these issues reconciled. We've also got many risk events. We've got Bank of England meetings, inflation data coming up, and so it'll be great to see these kind of risk events being played over. Plus, now that government borrowing costs are a lot higher, there's this kind of issue to contend with. So there's a lot going on, and it'll be interesting to see how it all plays out.
Welcome, and thank you for joining us. Let's begin with the latest from the Bank of England. Governor Andrew Bailey delivered comments that many have interpreted as cautious. He notably downplayed the recent surge in 30-year gilt yields and also showed little urgency around the possibility of cutting interest rates. This cautious tone appears to match current market sentiment, where expectations for further rate cuts this year have already been scaled back. August's rate decision by the bank was historic, revealing a rare deadlock among the Monetary Policy Committee members. That division has sparked interest in understanding what's driving the thinking behind those votes. Some of the more hawkish members, including Deputy Governor Claire Lombardelli and Megan Green, continue to focus on inflation as their main concern. At the same time, the bank faces a complex challenge balancing inflation risks with a mixed outlook for growth and the labor market. The job market first appeared to soften, then stabilize, though there have been questions around data quality. All of this adds to the uncertainty, and it makes sense that policymakers are taking a more measured approach for now. Meanwhile, the government has announced that it will deliver the autumn budget on November 26, later than expected. So why the delay? One likely reason is that economic signals are still too unclear. Inflation remains persistent, while other indicators like growth and employment are harder to interpret. Delaying the budget may give officials a better chance to assess the full picture. Additionally, several important data releases and Bank of England meetings are set to happen before that date. These could significantly influence how the budget is shaped. Higher government borrowing costs also add pressure, especially with long-term interest rates climbing. The government may need more time to weigh its options in such a tight environment. On the political front, the situation surrounding Deputy Prime Minister Angela Rayner and questions over unpaid taxes could become a risk factor. So far, markets haven't reacted strongly. Sterling dipped slightly, and bond yields have largely returned to previous levels. But political uncertainty is never welcome in financial markets. If the issue escalates, we could see more of a response. As it stands, market activity remains relatively calm. The FTSE has drifted to record highs over the summer, and trading volumes have been light. But all eyes will be on how these economic and political uncertainties develop over the coming weeks. In short, the message from both the Bank of England and the government is one of caution. Inflation, labor markets, fiscal pressures, and politics are all intersecting at a crucial moment. With the delayed autumn budget, officials appear to be buying time, perhaps, hoping for clearer signals before making major decisions. We'll be watching closely as events unfold. Thanks for being with us.